Hi, everyone. I'm just getting us situated here. So just as a friendly reminder, this is a lunch and learn from CryptoUK, and I welcome everyone today and thank our guests very, very much. I'm going to introduce them and let them introduce themselves, their bios in a little more detail in 1 minute. I just want to make sure everyone is aware that we are recording this session. So although we welcome questions in the chat, and that's how your questions will come to the speakers, and I will make sure I funnel those over to them. We will have it be an interactive session. It's about classification, and it is a classification of crypto assets, and it's an extremely important area that often is just not given the attention it's due. And, that's my personal opinion, but I am really grateful for our speakers today. Elena, and I'm going to massacre your surname, so I'm going to just call you by your surname, and Mike, whose surname I wouldn't massacre, hopefully, but I will let you introduce yourselves. We really welcome you both, and thank you for your time today. And we're going to just jump right in. Again, friendly reminder, it's recorded, and friendly reminder to put any questions in the chat, and I will feed them into the speakers who would really like this to be conversational. So please chat away. So in the chat with your questions. And Elle, I think we're still waiting.
Yeah, we've got the slide sharing looks slightly strange again right now.
Oh, really?
But yeah, let's have another go. I can have a go as well.
Let's do it again.
We've been having a little bit of tech issues this morning, so everybody, if you don't mind bearing with us, really appreciate it. So,
any
good? See it now?
No, let me have a go.
Okay.
Oh, hang on. That's working now.
It's great.
Okay, perfect.
And Ellen, Mike, if you wouldn't mind just introducing yourselves and then lead us right into the topic, and I'll watch for questions from everyone. So.
Sure. Well, I'm the boring lawyer, so I guess I can intro myself first. So I'm partner in the regulatory team at CMS in London. I also co-lead our crypto and digital assets group, which is a specialist cross-practice group with Charles Kerrigan, some of my other colleagues. I was formerly the head of legal for Europe at Binance, so I've got a lot of familiarity with, well, quite a lot of things, but including MiCA and how people get prepared for that, because that was my life for quite a long time. Prior to that, I spent 12 years across London and Hong Kong working in financial services regulation. So I've got a hopefully a decent kind of landscape view on where this sits, the MiCA regulation, in terms of other regimes. And I think we'll cover that in a little bit of detail on the call. But anyway, enough from me for now.
Hi, everyone. I'm Eleanor Tsvetanova. You can call me Al. No need to try and pronounce the surname. I am by background also a lawyer. I was a boring lawyer in financial services for 11 years, working at RBS in lots of different departments and actually leading, I think, some of their biggest regulatory change initiatives in the last 10 years. I joined Unis a couple of years ago. I'm the Chief Operating Officer at Unis. We're a London-based company. For those who don't know us, we're a CryptoUK member, proudly. And we specialize in AI-powered crypto asset due diligence and monitoring and due diligence using on-chain and off-chain information. And this is actually how we got into crypto asset regulatory classification, which is a heavily data-driven exercise. And to give people a little bit of background on why we decided to do this with Mike, we've had really a lot of interest in this topic in the last couple of months from actual and potential clients, from prospects, from people across the crypto community for a bunch of reasons. One, of course, is that MiCA is properly coming into force at the end of this year, as we'll be aware. In fact, ESMA just published a bunch of technical standards, I think, today on crypto asset white papers. Nice timing. And then the second is that people really don't know how to comply with some of these things and don't understand them. And especially when you're talking to kind of busy in-house counsel and heads of compliance and business people, we thought there was some merit and a lot of merit in doing an education session like this to just help people. So we want to make this interactive. I appreciate it's a bit more difficult because it's a webinar. But what Mike and I are going to do is go through some slides and some basics of crypto asset classification, focusing on MiCA for the next half an hour. We've got an hour for the session. Any questions, please pop them in the chat. We'll either answer them as we're going along or deal with them at the end. But we welcome any and all questions. In all honesty, during this webinar, after this webinar, if you want to reach out to either of us, we'll provide some contact details. We really are kind of doing this as a kind of almost community exercise to help people understand some of these requirements and obligations, especially given the MiCA deadline. So without further ado, I'm going to get us started on this exciting topic, starting with the slide on crypto asset classification and what it actually is. I think a number of you on this call will be aware of what it is, but I still think it's worth spending a minute talking about this. When we talk about crypto asset classification in the seminar, we're really talking about it for regulatory purposes. Obviously, we know crypto ecosystem is big. There's a lot of classification initiatives, various kind of government and non-government crypto asset classification initiatives. But really what we're talking about here is what type of asset is this for the purposes of a regulator and a regulation in a jurisdiction. So two things I want to say there. First is that, regulatory regimes differ per jurisdiction. So regulation is implemented and made on a jurisdiction basis, with the kind of slight exception of the EU, where obviously MiCA is a pan-European regulation. We're going to talk about it, but there will still be some jurisdictional differences. And so this classification exercise is the one that you actually have to undertake for every single jurisdiction where you might offer some kind of service which would trigger a regulatory requirement that applies to it. So that's why it's important. You have to categorize in every jurisdiction. And the way that you categorize it is usually based on a set of predefined characteristics, but typically it doesn't matter what you call your crypto asset. The regulated jurisdiction doesn't actually care. They care about what rights it gives holders, what kind of, what do they have the right to receive interest, other payments, what set of rights and obligations does that crypto asset entail for regulatory purposes? And this is where my duck cartoon that I'm very proud of comes from. So if it walks like a duck and quacks like a duck, most regulators will say this is a duck. It's a very substance-based assessment, which is what makes it complicated.
Barristers love that quote. I've seen that in a number of legal opinions, and I always love it when I see it.
Yeah, and the other area where this actually comes up with substance over form is tax. Does anyone on the call has got a tax background? This is I used to be a tax lawyer many years ago, so I sort of, this is my area of comfort. Like, you have to do a lot of work and a lot of analysis to figure out, like, is it actually a duck? So why does regulatory classification matter? We've answered this from a MiCA perspective here, but more broadly speaking, as we were saying before, it matters because once you classify an asset into a bucket for regulatory purposes, it is a security, let's just use the American term, then what follows is that there's a regulatory regime that applies to it and certain obligations you've got to meet. So you might need a certain type of license to trade it, to provide services in relation to it. There might be certain obligations that attach to how you do things like issue it to the public or issue it to investors. So securities, for example, if you want to issue securities, there are disclosure requirements. Derivatives, if you want to trade derivatives, you have to be regulated. There's a bunch of disclosure requirements to come with that. So it's very important actually to do this classification. And we're going to talk about MiCA because MiCA is the pan-European crypto regulation that's about to come into force. And what MiCA does is MiCA introduces a specific crypto asset, kind of holistic crypto asset regulatory regime in the European Union. And that regulatory regime applies to crypto assets, which are defined in MiCA itself. MiCA defines various different categories of crypto assets, and there are different obligations that apply to each of them. But the other thing that MiCA says, well, not all crypto assets are crypto assets. So you also have to figure out, if I'm looking at a crypto asset, is it actually a crypto asset under MiCA, or is it actually a financial instrument under the existing financial services regulatory regime in Europe, the Markets and Financial Instruments Directive, or MiFID. So it's a bit simplistic to say, is it a security or not? But I guess you kind of make the comment. So that's what the slide actually goes to. So why does it matter? It determines what regulatory permissions are required, what you have to comply with. And you need to know what type of MiCA crypto asset it is because different obligations apply to each. I will now hand over the floor to Mike to talk about this in more detail.
Okay, yeah. So really important that the Markets and Financial Instruments Directive, MiFID, which everyone knows, regulates traditional securities. it also regulates tokenized securities. So first question is, are we in MiFID? Are we in MiCA? If you're in MiFID, you're not going to have the right license, so you need to start thinking about that. If you're in MiCA, then I think if we go back probably one slide, there's three types of crypto asset under MiCA which I think are worthy of attention. So the first is e-money tokens, or EMTs. And this is a type of crypto asset that purports to maintain a stable value by referencing the value of one official currency, like USD. So think about USDC or USDT as the classic ones. An asset reference token also purports to maintain a stable value, but this time by referencing another value or right, or a combination of them, including one or more official currencies. So think about a basket of assets. A utility token is a type of crypto asset that's only intended to provide access to a good or service supplied by the issuer. And the word only there is really important. We'll come on to discuss why that is. So digging in a bit on what this all means, as Elle said, it's really important to know which token you've got, and there's a few reasons for that. So for any offers to the public or anyone seeking emissions trading in the EU of an e-money token, two things. Issuer needs to be a licensed bank or an EMI. And we've seen EU exchanges delisting non-compliant stablecoins. The obvious example in the market's been USDT, and we've seen pretty much everyone do that. There's specific rules for issuers of significant EMTs, but I think that's beyond the scope of this webinar, and that's too boring for this one. The second requirement, along with the licensing requirement, is that you need a MiCA compliant white paper, and that's part of the reason that we're talking about this today and focusing on it. And critically, there is a different template for e-money tokens as compared to other assets. So that's EMTs. So if we move on to ARTs, asset reference tokens, issuers again need to be authorized, but this time it's under the MiCA regulation itself. And again, what we expect is EU exchanges are going to start delisting non-compliant ARTs. So you've got to work out as an exchange what your token is. You've then got to look at the issuer's authorizations, because if you're, particularly of your own volition, admitting an asset to trading and it's non-compliant, then you're going to be on the hook. The second thing, again, similarly to EMTs, you need a MiCA compliant white paper, but it's got to be the right type of white paper. And we can come on to that in a bit more detail. So the third category are utility tokens. Now, there's no authorization requirements for these, and there's no white paper requirements. And this is not the case for anything that's not an ART, EMT, or utility tokens. So the fourth category is other crypto assets. They need a white paper. Utility tokens don't, but you've got to be really careful because it's only pure utility tokens. So I mentioned the word only in the context of providing access to a good or service. If this does anything else, so this gives you governance rights, anything else, that is not going to be a utility token as defined under MiCA. So people are getting tripped up saying, I don't need a white paper, I've got a utility token. And when you actually look at the rights attaching to it, like Elle said, which is the thing that drives the regulatory classification, you realize that you do, and you've got a non-compliant issuance. So the next slide, I think, sort of skips back to explaining about the MiFID MiCA distinction. A token, so a digital asset, virtual asset, call it what you will, a crypto asset, can be a MiFID financial instrument. So it doesn't matter whether you've got a bond, whether you've got a tokenized bond. If the underlying, or if the thing itself and the rights attaching to it is a financial instrument, and this will include derivatives, you need to be licensed under MiFID. That's absolutely critical, because I think we all know how big the sort of perpetual futures market, for example, is in crypto. There's a bit of uncertainty as to whether stablecoin settled perpetual futures are MiFID financial instruments, but I think everyone's kind of taken the view that they are. So anyway, exchanges that do spot and derivatives are going to need both sets of licenses, but it's just really important to stress this. So number one, have you got a token that's actually a MiFID financial instrument? Assuming that you haven't, you've got to make that classification as it says here, because that gets you into MiCA in the first place. Then within that, you've got to define in your white paper what you are under MiCA. Are you an EMT? Are you an ART? Are you a utility token? Are you something else? And I think it's really important to highlight the test for this. So the ESMA guidance is quite informative on this. So case by case, tech neutral, substance over form. So what you can't do is apply a blanket broad brush approach to this. You've got to look asset by asset, and the regulator is going to expect you to do that. So although we've got definitions, we've got lists of requirements, every single crypto asset will have different rights attaching to it, and these can be quite nuanced, and sometimes there'll be inbuilt staking mechanisms, and that raises questions about the regulatory classification. So you just need to understand the asset what you're dealing with, and I think that hopefully leads into what Elle's going to talk about now in terms of why we're doing this call. So critical to know what you're dealing with for licensing and regulation, critical to know whether you need a white paper and what type of white paper, and it just allows you to comply with your obligations. And yeah, I'll hand over to Elle to do the more interesting bit on international.
Thanks very much, Mike. This was very interesting actually too. So just to say a couple of things about this ESMA crypto asset guidance, we can circulate that as well after the call if people are interested. It is, I have to admit, the first time I looked at it, it runs to about 90 to 100 pages, right, Mike? It's like literally pages and pages of like text. It is sort of helpful, but it's not. It's about as helpful as like anti-avoidance tax case law, in the sense that what it illustrates is how difficult it is to make this assessment and how fact-based it is. It's really a fact-based assessment. You have to get to the bottom of how the project works, how the crypto asset works, what rights it gives holders. You have to go into a lot of detail and gather a lot of information in order to be able to then actually do the legal analysis classification. So it's not a simple legal analysis. And I want to make that point because I think if you haven't actually spent the time or had the opportunity to go through and really look at it and understand how complicated this is, you sort of think, okay, in the US, the SEC obviously has been saying everything's a security, and obviously we hope that will change and there'll be a proper crypto regulatory regime soon, fingers crossed. But Europe is not like this. In Europe, like, if it's a crypto asset, it's a crypto asset. It's not quite as simple as this. You actually still have to do this classification. And there are some instances in which your crypto assets might actually be let's say the European version of a security, which is a financial instrument under MiFID. That is basically a security. Another thing to bear in mind, right, which is a bit of a point of detail, but again, I'll make it because it shows just how complex this is. What ESMA said in its paper is that if your crypto asset has some characteristics of a financial instrument under MiFID and some characteristics of a typical crypto asset under MiCA, it's a hybrid crypto asset. And if it's a hybrid crypto asset, they actually automatically deem it to be a financial instrument under MiFID. Correct me if I'm wrong, Mike. So what that means, right, is that you actually have to do very in-depth analysis. You have to like keep digging and actually gather quite a lot of data. And there will be some gray area. Sometimes it's very easy. Sometimes this classification will be very difficult. So that's the only other point I wanted to make about this. Other than I have lots of views about this ESMA paper that I'm not going to talk about on this call. So the other thing that I just want us all to be on board with is that crypto asset classification, regulatory classification, is a requirement not only in the EU under MiCA, but actually already in many jurisdictions and will be a requirement in many jurisdictions. So it is a requirement in Singapore by MAS. It's actually a requirement in the UK. We haven't put the UK in this map, but you have to do the same kind of classification in the UK, similar to the EU, but not quite the same. Requirement in the Middle East, Dubai, VARA, in Hong Kong, actually in Australia. I think Australia just released something yesterday on this. So it is actually, if you're a business that is providing services in relation to crypto assets and you operate in multiple jurisdictions around the world, or you have a touch point, users or counterparties in multiple jurisdictions around the world, you have to do your cross-border regulatory assessment to figure out which jurisdictions actually you are deemed to be operating in for regulatory purposes and which regulatory regimes you have to look at. And under each of these, what kind of classification do you have to do of your crypto assets? So I just want to make, sorry?
There's a couple questions that have come in. So whenever it's a moment, it really is getting to this heart of your question. I think it's really, really important around where are you in the world? And once we're in, and I'm going to ignore MiFID for a second, Mike, sorry to do that. But once you're in the crypto asset space, where are you in the world and which regime and classification should you use? And one of the questions is there's other taxonomies out there for categorizing digital assets. And so it's just a clarification. Can we use CoinDesk? Can we use the FTSE scale? Are these, do you have thoughts on some of these pre-existing taxonomies how ready are those? How plug and play are those? And I'm guessing not, but I'll let you experts talk to that. And and then maybe one sub question, this is mine, is to just clarify, all these other countries have a taxonomy or classification system that may or may not be compatible with the MiCA one if you're dealing with MiCA as well. So just, I'll stop.
Yeah, I mean, I can take that to start with. I think the regulatory fragmentation across jurisdictions is one of the hardest things to deal with as a crypto business. And, I obviously extensive experience of that. When you're trying to serve customers in 150 jurisdictions, and they've all got different definitions of what a crypto asset is to start with before you get into what the regulations actually require. It's a complete nightmare. So you can have a security in one jurisdiction that's crypto asset and another that's neither of those things in another one. So I think, Scott, these taxonomies are useful, I think, but more from a kind of industry categorization perspective. Unfortunately, regulations are what they are, and it's just not going to pass muster with a regulator. If you go to ESMA or an NCA in the EU and say, well, actually, we think it fits within this categorization for DAX or FTSE Grayscale, they're going to say, we just don't care, and it may well be, and I think it probably is the case that these categorizations are too blunt, really. If you're a proper crypto person, you understand these assets, you understand the rights attaching to them, then it's way more nuanced than this. But this is the job that regulators have to do. They have to try and apply definitions to something, because without doing that, we can't talk about things, we can't have rules. So I think it's really important that the industry develops guidelines and standards, and we hope that that then percolates down to the regulators and they adapt their rules, because ultimately we want harmonized global regulation. We're a million miles away from that at the moment. But I think it's helpful when bodies like IOSCO publish things, the FSB, Financial Stability Board, have these frameworks, because then, and actually a lot of these definitions of crypto asset started with the FATF stuff, when the registration regime, licensing regime requirement came in. So in my view, it's better to start at the international level and try and push down, but unfortunately that doesn't always happen. But anyway, yeah, Elle, you probably got some additional thoughts.
No, I don't have much more to say on that, Mike. I think one of my points was the regulator doesn't care about an index. They just apply their own rules, unfortunately, in every jurisdiction. So you're at the mercy of the regulator. Once you're operating in a regulated market, right, you're actually at the mercy of the regulator for a lot of things. There's definitions in the statute and the legislation and the rules. But the regulator tends to have very broad scope about how to interpret them a lot of the time, unless you actually go to court to argue about it, like as has been the case in the US. So, you really are kind of dependent on the regulator's view of things. That's my first point. And the second is, I agree with you on harmonization, Mike. I think that's really important for the crypto market, and actually is one of the things that going to help it to scale really quickly. But it's very difficult in practice to achieve that, because it requires somebody to, get together and kind of try and do something, but kind of on a global regulator level. I know there's a lot of cross-regulatory initiatives, and actually, I think from a more kind of broader macro point of view, the one thing I will say, which is just a view of mine, but if there's somebody from the US on the call, I think Kathy might have been on the call, that could, be interesting to hear other people's viewpoints, or sort of seeing them in the chat, is now with the US picture being what it is, the US and the UK, obviously two very important financial services markets, along with Hong Kong, Singapore, a few others, very big financial services markets. What I'm hopeful of is that maybe the regulators in these markets might get together and there might be a little bit more harmonization and coordination across those. I think that would really make a difference. But so far that hasn't happened openly as much as we would like.
And it's probably just worth saying, on this call, obviously industry bodies are critically important in this, because, a lot of the lobbying, the policy efforts, I think there should be a real focus on trying to get that harmonization, because ultimately, that's the bane of everyone's lives at the moment. So yeah, really important for forums like this.
Yeah, I agree. We have quite strong views about this story, Mike, as well. The policy side. Are there any more questions, Suzanne? Should we keep going?
Keep going. Thank you. That's it.
Perfect. So I'm going to take us out of this much more interesting, bigger picture discussion and back into the weeds of actually trying to comply with the stuff. So putting my ex-in-house lawyer hat on, cross-border regulatory compliance is which is basically what regulations do I have to comply with and what jurisdictions given my product and service offering, like who am I serving, where am I serving them, how do I comply with these regulations. That has always been a really tricky thing. It's always expensive, it's always time consuming, it always takes a while. But one big difference between crypto and traditional finance, which I think makes two big differences actually between crypto and traditional finance that really make this, I think, even more difficult in crypto. First of all, traditional finance is cross-border, and you do have a lot of regulatory regimes, but a lot of the traditional finance players have been around for a while. They're kind of banks or institutions, and there's a lot more kind of material on it. There's a lot more literature on it. There's a lot more knowledge of how to do this cross-border regulatory compliance because it's just been around as a requirement for a lot longer in TradFi. And then the second is that in traditional finance, you don't normally have to have a discussion or an argument about like, what is the asset? Because again, the assets in traditional finance has been around forever, well, in our terms for a long time. So we don't have to argue about, is this a derivative or is this a security? We generally know, right? Like apart from a few edge cases. Whereas in crypto, it's a much more kind of, it's a much bigger kind of question at the start, like what asset is this? Am I even in the right regulatory regime? And that's what makes it complicated and much more expensive. Because when you do cross-border regulatory compliance, but you know what products and services you're offering to people in jurisdiction X, you can go to a law firm and you can say, okay, I'm offering payment services, I'm offering this, I'm offering an overdraft, a bank account, whatever it is. And they will say, okay, well, we kind of know what the rules are in this jurisdiction on that. So this is what you have to comply with. This is what licenses you need. It's not so much of a fact-driven assessment because you know what the products are and what you want to offer most of the time, right? The issue, the sort of more difficult thing with crypto is that if you go at the moment to provider and you say, okay, I want to I want to facilitate trading in let's say 3 jurisdictions for 70 crypto assets. One of the kind of core elements of your regulatory compliance is to actually look at each of these 70 crypto assets in each different jurisdiction and figure out, is it a crypto asset or is it something else? So so your starting point is actually, you even have to assess what kind of asset is this, right? And I know this is a truism, and I know lots of people on the call know this, but the reason I'm saying this is because this is the really difficult and manual and expensive part. This is basically like trying to get some kind of tax opinion on each crypto asset. It's very similar in terms of the types of information that you have to take and the analysis you have to do. And it requires a lot of facts to make that assessment. If you don't believe me, read the ESMA paper. So, the bigger your business, as Mike was saying before, the more jurisdictions you have, the more crypto assets you have or you serve, then the bigger your compliance burden and the more difficult and expensive it is to comply with these requirements. So options, you've got a few options as always to do this. So the first option is the kind of traditional manual option, which is, you go to, for example, your external legal provider and you say, well, I would like 70 legal opinions on these assets for jurisdiction A, 70 for jurisdiction B, 70 for jurisdiction C. In practice, what tends to happen is that the law firm goes and gathers the information about the project from publicly available information at the moment. Does a legal opinion, has a bunch of assumptions in it, and gives it back to you. That is a really time-consuming process, right? And Mike can probably talk to that in a minute more than I can. But it's difficult. It's not so easy to find information about crypto projects online. It takes a long time. It's not particularly quick process. So it's slow and it's expensive, and if you want to do this quickly, it's going to be difficult. The second approach is what we were talking about now, which is kind of an industry-led approach. Can we do this at an industry level? And there are lots of discussions going on about this. And for example, there were a lot of submissions on the ESMA paper of industry kind of bodies and participants saying, can't we do this classification at an industry level? ESMA can't you somehow sort this out? And ESMA came back and said, oh, this is, to paraphrase, not really our problem. We just make the rules, you go off and do your thing and make this work. So there's a lot of discussions going on about industry-led initiatives in different parts of the world, but they haven't yet kind of borne fruit into anything that we can use. for most, for kind of crypto asset classification across the board. And I think it'll take a while before they do. So if you are trying to comply with the rules or trying to roll out things quickly, that's not an option for you. And then the third option, which leads me on to kind of what we're doing with CMS here to kind of help the industry comply with these requirements, is automating the most manual and the most kind of time-consuming part of this process, but not the legal analysis part, obviously, which still needs judgment. So a large chunk of time that you spend trying to classify a crypto asset is involved in actually collecting information about it. And when you're looking at like kind of regulatory compliance solution, you always want to automate these sorts of things. Like, what is taking lots of time? What can we automate versus doing manually? And in my years of doing a lot of regulatory compliance projects, I've actually stood up projects like this before in-house where we automated certain things, where we knew that actually, when we looked at the manual, we were like, it's not really worth getting, for example, law firm to do it. We've worked with law firms before to do this. So this is actually the third approach. And I would say the most practical at the moment, at least in our experience, to automate the fact gathering. Did you want to say anything about the slide as well, Michael?
Yeah, I think it's worth saying as well. I mean, it used to really frustrate me when I was looking at legal opinions, when I was running the European legal team at Binance, because the amount of time that essentially the facts section was a bunch of assumptions that assumed that the thing had none of the characteristics that would make it a security. And then the opinion would say it wasn't a security. And I think there's zero value in this. This is caveated to the point of being effectively useless. And part of the reason for that is the information gathering. Law firms either wouldn't be able to do it, wouldn't want to stand behind it, that kind of thing. So not only is it expensive and time consuming, but the end product is often of much lower value. And in terms of your robust demonstrating compliance, then you show that to a regulation, they say this is weak. So that's the other thing I'd add.
Yeah, very good point, actually, Mike. And this point of consistency is actually quite important, given where we are at the moment. It's very dangerous to have. It's actually very dangerous when you're doing regulatory compliance, I think, to have a position that looks inconsistent. You want to basically, you want to be able to demonstrate to a regulator you have a consistent process across the board, that you analyze things in the same way. Because even if you happen to be wrong or something goes wrong, it's that consistency, I think, which keeps you actually safe. At least that's, again, in my old world, what I used to do. And it's pretty fundamental that you've got good information to base these opinions on, as Mike said. And again, to any people on the call who are not familiar with legal opinions are only as good as what the legal opinion minus the assumptions of the caveats is. So you always have to read the assumption section quite carefully, because basically it assumes lots of things and it's subject to them. So if you have like 56 assumptions that are basically like, oh, well, we've assumed all these things, as Mike said, it's kind of not worth a piece of paper it's written on. So that's pretty fundamental, actually, to the quality of the legal opinion you get. So that brings me nicely onto the last slide in this presentation deck, which is talking about the tech-powered crypto asset classification product that we launched with CMS, due to, I would say, very popular demand from our clients actually asked for it in connection with license applications and actually sort of other regulatory initiatives and kind of categorizing assets quickly, which basically enables you to fast track the most time-consuming part of the process, which is the fact gathering, and concentrate on the legal analysis. So the way that it works is we prepare a legal questionnaire for each jurisdiction with CMS, a form of legal opinion, and then we at UNIS actually source the information that's necessary for the legal analysis. So we are, as I said, a crypto asset due diligence and monitoring provider. We're a tech company. We gather huge quantities of information publicly available, and we analyze it. We have a team of research analysts to check everything, and we produce good up-to-date current due diligence reports very quickly in a form that's flexible enough to deal with lots of different types of regulatory questionnaires. So if you have 5 jurisdictions that you're looking at, we could very quickly actually spin up reports for all 5. So that's what we do, and we've been working with Mike and the CMS team, who then take that analysis and actually review it from a legal perspective and provide an opinion. And honestly speaking, I'm not saying it's just because it's our product, this cuts the time that you need to do and the cost that you need to do this exercise very, very considerably. It was partially born out of, let's say, our own experiences, and Mike's and mine, of being in-house counsel in large companies that had to deal with this sort of thing being done manually, and how expensive and time-consuming a nightmare it was. But this kind of automating the manual part of the process, we found works extremely well. We have a lot of clients interested in it and using it now. So yeah, this is kind of our solution. I can't kind of demo it to you at the moment, but suffice to say, it's been really, really popular, especially with MiCA coming into force.
Yeah, absolutely. Sorry, go on. Yep.
No, go ahead, Mike. I had a question come to mind that is my question, if you don't mind me annoying you every so often with those.
No, please do. Yeah, all I was going to say was, in terms of how the opinion interacts with the diligence report, so effectively it would just cross-refer, so it would be appended to it, be annexed to it. So instead of some weak fact section which is caveated to the point of being a bit silly, it's going to refer to this really detailed diligence report. So it's just way more robust as a product. And I think in terms of demonstrating that you've taken a compliance first approach and done your compliance job properly, it is far more robust. So that's all I was going to add on to that. And I think the other thing to mention as well is that this helps with white paper compilation. So we talked about the two requirements for cryptoasset classification as it relates to the nature of the entity and the licensing requirements around the issuer, but also obviously the white paper requirements as well. And the white paper requirements, anyone who's looked at the templates, anyone who's read the thing this morning from ESMA, really detailed requirements. A lot of the time it's just impossible to get that information from usual sources. So this report effectively can be used to just map straight across and pre-populate a white paper, which is another product that we sort of bundle into this to the extent that people want it.
Yes, good call, Mike. I was going to also mention that ESMA and very timely released the white paper technical guide this morning, which is good because we are now in December, so it was about time that they actually did so, given the rules come into effect at the end of this month. But it is very detailed, and honestly, it is it's another product that we sort of started with crypto asset classification, but as Mike says, we can also prepare white papers with you. It is actually the same tech. We use the same. It's largely the same information. As Mike said, it's probably about 70-80% crossover information, and it's a much more robust and fast and cost-effective way of actually preparing these documents than kind of scouring the internet. I mean, I started live, and this is probably a joke to end the seminar on, but I started live. I was a tax lawyer for a bit, and then when I moved to London, I was also a securities lawyer, writing big prospectuses. And I still remember we used to write the fact section ourselves internally and sort of give it to the client and say, "Is that how your business works?" And sitting on Wikipedia at 3:00 in the morning. So I really hope we've gone past that, which is why a product like this is actually a much more efficient way of doing this kind of thing than paying junior associates at law firms to basically trawl the internet.
Yeah, so you both answered. I had 3 questions, and you answered 2 of them already. So thank you. Because where I was headed, my questions was just clarifying sort of what would be the output, and then how someone would use it. And so the output is this robust report, and not something shallow, and it has real data behind it and legal opinions behind it, and that's something you can.
Yes.
And then my other. Go ahead. If you want to elaborate on that, make sure I didn't get anything wrong there. So.
No, I think that's right, Suzanne. And the other thing I just wanted to mention is, without getting too much into law, the requirements to issue a white paper is also supported by another requirement under MiCA to actually update that and to issue disclosures if something significant happens that affects the project, right? So it's similar to the kind of disclosure regime you have the traditional securities law. And, again, and what you have to do actually, by the way, if that happens, is you have to actually issue a completely new white paper and file it with the regulator. Again, that's quite a pain. We can, again, do that very quickly and easily using tech. We can, scan, we monitor on an ongoing basis what's going on a project, and we can actually produce an updated version of this very quickly. So it makes it much easier to comply with these quite cumbersome regulatory requirements.
That's really helpful, because my second question was sort of looking at the other side of the coin for issuers and helping them prepare those white papers in it. You answered that, and I think it's an incredible contribution to a real need out there. My third question, and it may or may not be something you want to tackle, but it's something I've heard out there from exchanges in particular as they reflect on the MiCA requirements that are landing on them as the exchange, to gather this information, know this information about every token or asset they might list. And their concern was that the information isn't always there, and who's liable for the information that does get gathered to try to support a position. And so I don't know if you just have any thoughts to share on that. I know we have members that are exchanges and others that are that are trying to grapple with this. It's just sort of, that was those two concerns were mentioned more than once at a few sessions I was at. So
yeah, I can take that. So I think for exchanges, there is obviously a concern that who's standing behind this, who is ultimately the person that's got the obligations on them. So the obligation applies to anyone who's making a public offer or seeking the admission to trading. So on the face of it, that will usually be an issuer. So where you've got an identifiable issuer, what I expect exchanges to do with this is to, so for example, new assets, you build this in as part of your asset listing process. So most of the big exchanges, certainly my former employer, require legal opinions anyway for issuers. So you can't pitch up and get your asset listed on the platform unless you come with a legal opinion. Now it's much more efficient, and I used to have to review legal opinions from tons of different firms that all look different, some of which are better than others. It took a hell of a long time. It's much better as an in-house counsel to have an agreement with a firm or with providers, hopefully like us, who can just do that for your issuers. The cost is passed on to the issuers. It takes the pain away from the issuer because they don't have to go out and find a legal opinion. You say, we will get this done for you. You pick up the tab, which is much lower than it would be if they were going out and getting it on their own. And it just makes the whole process more efficient. So I think to the extent there's an identifiable issuer, then exchanges will want to make sure that the person publishing the white paper, etc., is going to be the issuer of the token. So that's where I expect the market to go on that. And I think that's kind of already what happens with legal opinions, and the white paper is just going to be another obligation. There is a question about unidentifiable issuers. So obviously things like Bitcoin, classic example. And I think there's a handful of those where exchanges will sort of need to come together and I guess and take a view on who stands behind that. I think the final thing to mention is probably to the extent that exchanges voluntarily admit assets to trading on their exchanges, so it's not at the volition of the issuer, that's where sort of liability can come in. So I think obviously you need to take specific advice on it on a case-by-case basis, but exchanges, I think, should be passing this on to issuers to the extent there are identifiable issues, because ultimately it's their project.
That's really helpful. Thank you, Mike. Thank you, Al. I want to pause and make sure there are any other questions. Please don't be shy. And we've got a few more minutes. And if not any more questions coming in, let Mike, you and Al maybe summarize, or if there's any thoughts you want to make sure we close out with before for the end of the session, please go ahead.
One thing maybe we should discuss is timing, Mike, of these requirements,
absolutely.
actually.
So I think under MiCA, obviously people know that the ART and the EMT regime came in the middle of this year. So I think that's a lot of people are sort of still coming to terms with the fact that actually all these requirements have been enforced for stablecoins for quite some time now. The big bang is obviously the 30th of December, and we're very close to that now. It's the 4th. So on the 30th, this all goes live. There is some grandfathering for pre-listed assets, but on a look-forward basis, any new assets that exchanges are listing and into trading, they are going to be subject to these requirements. So you need to know what that asset is. You need to make sure the issuer's got a white paper. You need to make sure that if it's an EMT, the issuer's an EMI or a credit institution. If it's an ART, it's got authorization under MiCA. All this stuff is not yet in play, and it is going to be in about 3 weeks' time. So, timing is really the essence on this.
Do you have a sense of, maybe Do you have a sense of how well prepared people are? I mean, it seems like from what I'm hearing, it's really a mixture of people not fully realizing how long this will take if they don't use something like, your collaboration, which is automation, data provider, and the legal opinion. It just seems to me a little bit that people might be thinking they can do that manual route that Elle pointed out, and it just seems like that's not gonna be timely enough.
No, I completely agree with you. And I think there is a recognition that's starting to dawn that, yeah, this is such an enormous job. And it's not only a cost, but in terms of your internal legal team resource, people are going to have to put teams on this. It's that big an exercise to go back through an existing book of assets. Also, to make sure that your new asset listing process going forward is adjusted to take account of all of this and to make sure you've got the compliance. It's a huge internal lift. And part of the reason that we wanted to do this session was to try and just highlight this to people, because we want everyone to be aware. And what we don't want is obviously people to run into difficulties down the line. The earlier that people sort of, I guess, try and tackle this head on, the better it's going to be for the industry as a whole, because we don't want service interruption for users, we don't want delistings, we don't want any of that. But it will happen if obviously if this process gets ahead of people.
Yeah,
So I mean,
agree with you, Mike.
And I think that's really important, and we're getting a really important question that kind of piggybacks onto that, I think, really well, is do we anticipate any forbearance coming? Anything where exchanges that aren't ready, just any mercy at all, or is it just,
As I'd like to say yes, I think the answer is no. Ezra have been really clear about this entire regime that there's going to be no forbearance. People have had enough warning. Now, yeah, okay, arguably they've dragged their feet a bit. The EBA have dragged their feet a bit on the level 2, on the guidance and the regulatory technical standards, but frankly, that's not going to help anyone. So the regulators made very, very clear that the deadline's the deadline. Everyone's had fair warning. They didn't extend the deadline on stablecoins, despite a lot of people talking about the fact that they would. I heard that so many times. Didn't happen. Won't happen this time, I don't think. I'd be very surprised.
No, and they refused to extend it on sustainability requirements, so which we haven't talked about, but obviously our friends at Zumo are experts in this, have run a few sessions, but they also, ESMA also came out and said, we're not extending the sustainability requirements deadline. You will have to comply with those from January next year. So
and that's a subject to a separate webinar. That's a massive lift as well on the sustainability.
Massive lift. Which we could have covered here, but we want that topic needs its own webinar, to be honest.
I can see why this is funny, and Elle and Mike are right to point us to our member firm Zumo that is also can do help do an automated kind of response on the sustainability requirements. I think the message, to me, and I come from a prior firm that was data and software in the crypto space as well, is that automation is of this and the information gathering and putting tech to work like Eunice does, and then is really, really going to be important to this solution. So I'm, glad we could talk about that and talk about that as talk about the topic, but also talk about the role of technology and automation to really help get there. And that is the future. It just is. So, and then combine it with the subject matter expertise and of the legal opinion, that Mike and CMS bring is, you need both, basically, I suppose, is the moral of the story. And thank you for highlighting. Any other?
You do. And
go ahead.
And I think, and I was going to say, to the automation point, I think, so 2 points. First of all, automation is really important, but automation obviously doesn't get you the whole way. So you sort of, with automation, and this is also my experience in my previous role, because we used to do all these regulatory initiatives and use automation. Automation will get you further and further along as the tech is amazing and it just keeps getting better, but it doesn't get you the whole way yet. So this hybrid, I think, is actually great from a regulatory compliance point of view, because it enables you to speed up and improve the quality of the overall package, but without sacrificing the correctness, the quality, the kind of, you're not you want to automate without taking extra risk, if that means from a regulatory compliance perspective. That's quite important. So the way we built this actually is to ensure that. So these due diligence reports where we gather information, we actually have analysts checking them. We have like proper trained analysts at UNIS who do that for people. And then obviously Mike and the team are like very well versed in, you know, crypto opinions. You've been doing this for a long time, Mike. So this is the kind of process you want to build to kind of mitigate any risk of using automation. The first thing. And the second thing is just to echo that I think, you know, we're in a, you know, crypto is a tech play, right? It's a tech industry. So, you know, I'm quite passionate personally, and I know Mike, as we are actually at UNIS, about trying to use tech to do regulatory compliance, right? Like, why do we have to be stuck in this like old school manual, you know, everything manual kind of regulatory compliance world when we're dealing with some of the, you know, best and brightest and most advanced technology in the world in crypto? Like we can do things better than TradFi. So that's where we come to. That's where we come at on this.
That's great. That's great. It's a really great way to close with one following question. Is what's the next steps? If folks are, you know, in need of this, in need of your services, should they reach out to, you know, either of you personally? You know, obviously everyone on the call in this case is our members, and so, you know, they, you know, are you okay if they contact Sue or me and we pass along your contact info, you know, if they don't have it already, I guess is the question, or reach out to you on LinkedIn. So
100%. I mean, you know, we want to help people, and that's the whole point of this session is to try and actually give people something that's useful and that helps them. So 100%. Yeah.
Any way you want to reach out to us, it's fine. LinkedIn through you guys at CryptoUK, Suzanne, would be great. Email us directly, whatever's easiest for you.
Yeah.
I'm very happy to talk to anyone about this.
Well, thank you.
And, you know, and help people and help you if you're wanting to build your internal compliance strategy, because we think this is really important for the industry too. So,
yeah, you know, the message you hear a lot from regulators and policymakers globally, and I think a message that CryptoUK and its members convey very clearly is collaboration. It's a public-private sector sort of collaboration a lot of times, and that the industry does value regulation and does want to comply. Of course, we'd like it to be proportionate and reasonable and all of that, but we'd like to comply. And so this is a really sort of out-of-the-box, ready-made way to help everyone get a strong sort of, as you said, sort of due diligence processes in place internally, but also then meet the output requirements of MiCA in this case. So thank you both very, very much. If there's any closing questions, I think we're wrapping up now. So please feel free to contact us at CryptoUK if you'd like, and we can pass along your questions or your information to Ellen, Mike, or reach out to them directly. As they said, they're both really friendly, wonderful people, and I am delighted we got a chance to hear from them and hear on this important topic. So thank you both very, very much.
Well, thanks for hosting, and thanks for everyone for listening to us.
Thank you.
yeah, thank you.
Okay, everyone. Bye.